Welcome to today's Savant Live webinar, and thank you for joining us. Today, we are discussing the topic, when your aging parents need financial help. My name is Will Gunlicks, and I'm a financial advisor here at Savant Wealth Management, and have been in the financial services industry for 20 years. Over the years, I have dealt with this issue firsthand working with clients, and I'm also personally experiencing this topic with my own family. I'm also joined by fellow advisor Ed Cruickshank.
Thanks, Will. Happy to be here. And I also have both a lot of experience with this with my clients, as well as my own personal experience with my parents as well. I've been in the financial industry more than 20 years and live in Mundelein, Illinois, and work out of the Lincolnshire office here with Will.
Today, we're going to be going through several items, including signs your parents need help, understanding their situation, strategies for talking to your aging parents, and some additional resources and options. We're going to start out with signs your parents need help. So if you are lucky enough to live near your parents or your aging family members, these signs will be easier to identify, but can also be observed through phone calls, FaceTime, and even emails. Starting out, it's important to notice any physical changes. Your aging family members may have difficulty moving around or carrying out daily activities such as bathing, dressing, or eating. They may also experience changes in their vision or hearing. Next up is memory loss. Your aging parents may have difficulty remembering things such as appointments or important dates. They also may forget things that they have just learned, repeat stories or questions, or misplace things. Additionally, changes in mood or behavior may become more irritable, anxious, or depressed. They may also withdraw from social activities, lose interest in hobbies, or experience changes in their sleeping patterns.
Yeah, that's right, Will. Also, there's the last three we're going to just touch on. You can observe if there's unpaid bills, or maybe they're speaking of some financial troubles. Your aging parents may struggle to manage finances, forget to pay bills. When you come see them, they might have a stack of unpaid bills. That's a good clue or indicator, or falling victims to even the basic type of scams. That's another indicator. Just in general, having trouble keeping up with the household expenses or managing their debts. Next, a neglected home. So this is pretty obvious to the eye, both on the interior, exterior of the home, if it's becoming more cluttered, dirty, neglected, or difficulty maintaining even the outside part of their home and keeping up with basic repairs. That's another indicator that there maybe it's time to have this type of conversation. And lastly, unexplained physical injuries. Frequent falls and bruises, unexplained injuries can also be a sign that your parents may no longer be able to care for themselves and their surroundings. So the first thing, if you start noticing these items that Will and I just outlined, first thing is really to try to get the full picture and really understand their situation. Make sure you do it from a point of empathy and good communication, but also be transparent that you're trying to help and you'd like to understand their full picture. And really, it comes down to these, four main items. Get your handle on the type of income they have, any outstanding debts they might have, their general expenses on a monthly basis. Maybe they already have this laid out, maybe they haven't, and it's a good exercise for the both of you to go through. And from these three items, you can create a monthly budget. This will really give you and them a clear understanding of where they stand. And one of the reasons really to get this full picture, an understanding of a budget, is because of rising healthcare costs and just general inflation. As you can see here, the Center for Medicare and Medicaid Services, projects that healthcare costs are going to continue to rise at over 5.5% a year. This is something we factor into our financial planning for clients, even more so than the general cost of inflation, typically year in and year out. Other areas of inflation to keep your mind on, and for the parents to keep your mind on, is just general cost of living, groceries, gas, etc. These things, I call them your silent partner throughout retirement. You don't often think of them, but it continues to possibly erode away at their standard of living. Housing costs, insurance, property taxes, maintenance. This is all another part of inflation, as well as rising interest rates can now, with where they are now, can possibly be more expensive to carry ongoing debt. Social Security benefits do have periodic increases to mirror inflation, but many of these increases go to Medicare costs and don't get directly passed on to your parents. Once you have an understanding of their budget and their expenses, and you understand different inflationary pressures, if necessary, you need to have the conversation of potentially where to cut expenses. And this is I call this the needs versus wants discussion. Always important to reduce your budget where you can, and to delineate between the difference between the two, needs versus wants. If possible, even looking for part-time jobs early in retirement that can provide extra income and benefits is possibly worth discussing. Family assistance, and this could be family assistance, not necessarily monetary help, but really just asking for advice. Be transparent. Let them know where you stand, and maybe they'll have some good advice or resources. It's not necessarily seeking monetary assistance, but just letting people know where they stand and if they have any thoughts and advice. And ultimately, if they need professional help, either with someone helping with their taxes or budgeting or financial planning, this would be a really good resource for them.
Thanks, Ed. As Ed mentioned, there's a lot of important information that it's good to gather as you're having these conversations. One of the tough parts is getting into the flow of that conversation with everyone and just talking to your parents about this. So we wanted to outline several strategies to hopefully help have that conversation with your parents, and also hopefully incorporating other family members as well. So number one is choose the right time and place and involve other family members if possible. Make sure your parents are in a comfortable and relaxed setting where they can focus on the conversation without distractions. Choose a time when they are feeling well and not under any undue stress. And as I mentioned, if possible, involve other family members in the conversation. This can really help share the responsibility and provide additional support. Two, when discussing finances, it's essential to use a respectful and empathetic tone. Avoid coming across as judgmental or critical, and try to put yourself in their shoes. Often at this point, inflection point in their lives, it can become totally overwhelming to stay on top of the finances, and it's not anything that's intentional. Number three, ask open-ended questions that encourage your parents to share their thoughts and feelings about their finances. This can help them feel heard and valued. Number four, active listening is crucial when discussing finances. Listen carefully to what they're saying and ask follow-up questions to show that you understand their perspective. Number five, remember that this conversation may be challenging for your parents, and they may need time to process the information and make decisions. Be patient and understanding, and avoid pressuring them into making decisions before they're ready. Often when you first have this conversation, the response can be defensive. It just takes time often for them to process what's happening. So give them some time, and follow up is a great strategy. And finally, be prepared to offer solutions to support to your aging parents. This can include helping them create a budget, exploring additional sources of income, or assisting with bill payments. Next up, we're going to go through several resources and options that you would have, as close family members. Many of you have heard of some of these, but it's important to understand nonetheless. So first off, in terms of government programs that would be able to assist in this situation would be Social Security. As many of you know, Social Security is a federal program that provides retirement, disability, and survivor benefits to eligible individuals. Aging parents or family members who have worked and paid into Social Security may be eligible to receive benefits. Again, most people are aware of Social Security. Where we see this coming up right away when people step in and start helping out is maybe someone has a disability or a health situation that pops up in their late 60s, for example. Maybe this person just hasn't started collecting, because you have until 70 to start collecting Social Security. So this is an important question to ask right out of the gates. Furthermore, Medicare, another government program that people are familiar with. This is a federal health insurance program for individuals age 65 and older, as well as those with certain disabilities or chronic health conditions. It covers a range of medical services, including hospitalization, doctor visits, and prescription drugs. On top of understanding if they're on Medicare or not, it's also important to know if they have a supplemental health insurance plan. Most people will have what's called a supplemental plan above and beyond Medicare. So you'll want to gather those details as well. Next up, Medicaid. This is a joint federal and state program that provides health coverage to eligible low-income individuals, including many seniors who cannot afford healthcare on their own. The really important thing to understand is that Medicaid eligibility and benefits vary by state. So each state is going to have different income levels, different asset levels that they allow you to have and still be eligible for Medicaid. So that's a state-specific program that you want to look into depending on which state is applicable. Next up, Supplemental Security Income, or SSI, is a federal program that provides cash assistance to eligible individuals who have limited income and resources. It's designed specifically to help seniors and others who are unable to work due to age, disability, or other reasons. Next up, Low Income Home Energy Assistance Program. As you can imagine, the energy costs for seniors for their house or wherever they're living is probably one of their largest fixed expenses on a monthly basis. So this is important to look into. It's a federal program that provides assistance with home heating and cooling costs for low-income individuals, including seniors. Next up is a really, really important one, and one that often can be the first stop for people trying to help see what resources is out there. That's the Area Agencies on Aging, or AAAs. So these are local organizations that provide a range of services and support to seniors and their families. These services may include case management, transportation services, home delivered meals, for example, and caregiver support. So these are typically going to be assigned out by county, and often there will be a caseworker for the specific county that they live in. And so we would encourage you to get connected with that local person. They'll usually, you can schedule meetings, a few weeks out, and they're often very happy to have family members along in those meetings. So that's a great first stop for people to see what specific programs they might be eligible for. And typically those professionals that are the caseworkers in these agencies have a great idea of the local Medicaid eligibility and things like that. So they know all the limits and are experts in this area. So would definitely encourage you to get connected with someone there. And if your family member happens to be a veteran, this would also be a really important first step to understand what the benefits are. They might be eligible for a range of benefits through the Departments of Veteran Affairs, which can include healthcare, disability compensation, and pension benefits. And this is all broken out by service time, if you've done wartime, things like that. And on top of, or in addition to the area agencies on aging that have county-based representatives to help, the VA also has counselors that are available typically on a county-by-county basis that can help determine your eligibility, and they can also help the family and the veteran apply for benefits if they haven't already. So that's another great first stop to look into if your family member or parents are veterans.
Great, thanks. Thanks, Will, for some of the overview on the government programs. Next, I'm going to briefly talk about some of the other type of insurance that's out there and for your aging parents. And there's also the traditional long-term care, right? This will provide some insurance coverages for people that need some sort of assistance or nursing home care or in-home care down the road. Traditional long-term care has higher premiums. You often need to use it or you lose it. So you may not ever need it, even though you paid into it for many years. Typically, it's best to look to purchase these type policies before you turn age 60. They tend to get quite expensive after that. And the other downsides are is the company can raise their premiums, and they have over the past number of years pretty dramatically. It does give you the most complete coverage, but it's also the most expensive. There's also hybrid long-term care policies. I'll touch on that in the next slide. Basically, it's an insurance contract. It has some long-term care provisions. It can be a little more affordable as well. In-home or facility care. This is another sort of type of care, long-term care that you can get. Tends to be a little less expensive, as you'd expect, but the average cost just here in this Chicagoland area for in-home care, depending on the type of care you're receiving, about $5,000 to $6,000 a month. And if you're in a nursing home, again, depending on the type of care you're receiving and location, that can average to $7,000 or $8,000 a month. And if someone needs memory care, that's even more expensive, as you would think. Obviously, Will touched on some of the Medicaid eligibility as another sort of form of insurance, if you will. Varies by state. It's important to denote that. Within Illinois, there's $1,215 per month income for a single person, or $1,643 a month for a couple for immediate eligibility. And in those cases, you have to have assets less than $2,000 or $3,000. Again, not something I would recommend planning on yourself, or you wouldn't want a loved one necessarily in a Medicaid situation, but it does exist there as a safety net. One of the more overlooked areas is actually support for the caregiver. And there are a lot of programs that support the caregiver. We often think about the person that needs the care as being a primary concern, which they are, but it's very important to understand that the person who is doing the caregiving needs support as well. The statistics say that nearly 85% of all long-term care in the home is provided by unpaid family members and friends who are not trained in this. So it's very stressful. They're not skilled. They're trying to do their best, but it's a very stressful situation, hard on them. There's a lot of programs out there that support the caregiver and really to help them as family caregivers and support them as well. Last type of planning to be concerned with or within the long-term care is advanced care planning. That really involves discussing and preparing for future decisions about your medical care if you become seriously ill or unable to communicate your wishes. You need to have meaningful conversations with loved ones, family, friends. And that's really the most important part of advanced care planning, where you really make your wishes known. It's really about doing whatever you can to do to ensure that your healthcare treatment you receive is consistent with your wishes and preferences if you're not able to make decisions or speak for yourself. I'm going to touch briefly on long-term care. We touched on it on the last slide, but to get a little bit more in depth regarding options outside of traditional long-term care, there's the hybrid long-term care policy. It is a life insurance policy. It does include certain riders, making some of the death benefit available if long-term care needs arise. It may not cover all of the costs that you need, but it's a way to sort of hedge and offset some of those costs. Another thing to consider is the single premium deferred annuity. It can be a lump sum investment, and you're locking in a stream of future income that's available for long-term care needs. And if it's not needed for long-term care, then what you paid in is going to be returned as a death benefit. So that way, you're paying in and you're going to get something back, be it a long-term care benefit or a death benefit. And the last thing, I know Will and I have had this pop up quite a bit, is converting a cash value life insurance that has been built up over time in different types of policies that could be moved into a long-term care type of policy or benefit as well.
Thanks, Ed. Before we dive into the next slide here, just wanted to remind everyone, feel free to use the Q&A box to ask questions, and we'll be addressing those at the end, but feel free to use that as well. So next up, want to review some things that we call checklist planning. So for the under that category, the main topic would be estate planning. So when you're entering this journey of helping aging parents, is understanding if their estate plan is buttoned up. And what we mean by that is, first off, is do they have trusts and wills set up? This is important because having a proper trust set up, for example, in the event of incapacitation, would help manage those financial assets through a successor trustee, for example. So understanding if they have trust and estate, a will set up. If they do, that's great news. Next thing you need to consider is has it been updated recently? So typically, every 5 years is the cycle that you'd want to review it. There might not be any changes needed, but estate tax laws, both federal and on the state level, change quite a bit. So that can be an area that might be needed to be fine-tuned. Also, what we call the players in the estate plan might need to be updated. Your successor trustee, for example, might not be a good fit anymore, that maybe they were a great fit for you 10 years ago. So that's something to consider, is just to make sure that it's updated. Within the estate plan, typically you're going to get powers of attorneys. So these are important, especially under this topic with aging parents. So there's typically two types of power of attorneys. There's for healthcare and for property. Healthcare is going to give the agent under that power of attorney the ability to make decisions on healthcare and medical decisions on your parents' behalf, for example. And for property, that revolves more around financial assets, bank accounts, things like that. You're going to be able to plug in and help them manage the property or the financial accounts with that power of attorney. And there's typically two types of power of attorney that we really wanted to clarify. today. First is springing. So what a springing power does is the power of attorney agent would kick in if there's a medical issue where they're no longer able to act on their own behalf. And that typically would require a doctor's note and some extra steps to get listed as the agent of power of attorney on an account. The other option is a durable power of attorney, which once executed is effective immediately. And typically that makes more sense in a proactive environment where you're wanting to plug into the accounts, get linked up. You might not necessarily be actually managing finances for your parents in this example, but if you're plugged in and something were to happen, you're ready to go, and it's a little bit easier process. Last thing on power of attorneys is every financial institution seems to have a little bit of a different process in terms of getting plugged in. So one of the recommendations we have is if you're in proactive mode with this, often, banks, for example, will have their own document and own form where you can have your parents sign and list you on the account as a limited power of attorney, for example. And that's a way to just get on the account proactively through the specific financial institution's form, that then if anything were to pop up down the road, you're ready to go, and you have much less disruption. So that's something that is great to do in a proactive manner. Finally, wanted to talk about, are your assets titled correctly? So if you're thinking everything seems great, we've done all that, the last thing to really double check is if you have a trust set up, for example, is it funded? So you might have a big, thick stack of estate planning documents and you're feeling good about that. But if none of the accounts are retitled to the trust or the house, for example, it really makes that trust that's set up moot. So you want to make sure that everything's buttoned up from a titling standpoint. And also the other big key area is beneficiary designation. So IRAs, 401ks, for example, can't change the titling on those to your trust, but you can adjust the beneficiary designation. So everyone's unique. You want to use whatever the attorney's recommendations are for those, but that's something to double check with any of those types of things. So an important slide here in many ways. So that wraps up most of our content and things that we wanted to go through. Now we're going to answer some of the questions that have been submitted throughout the presentation today. So just give us one moment and we can pull those up.
Yeah, I can take that. There's one that popped up here. Well, I'll take this one. Can I move assets out of a parent's name to get them Medicaid eligible? So this is a common question that I hear from some of my clients regarding their parents and trying to reduce their asset level to get them Medicaid eligible. First of all, it shouldn't be a goal to try to get them on Medicaid, but given the type of living situation that is, but you have to be cognizant there is a 5-year look back. And I can speak to this out of experience with both clients and my father-in-law, where you have to go back over 5 years for bank statements and any financial record at all, where you really have to prove that you weren't moving money out to get them Medicaid eligible. So you're almost guilty until you prove you're innocent in that type of situation. So just be aware of that. That could be a pitfall. It's quite an onerous process.
Thanks, Ed. Another question that came through is having a will set up good enough. I can tackle that one, Ed. So a will is a good start. The main issue with a will is that any assets that have passed through the probate court. So if someone passes away everything goes through probate, which is subject to the specific county where the assets are held or where the person lives. And that can be an expensive process. It can be a long process. All the will is going to do is tell the probate judge where those should be distributed, where a trust is better because any of those assets that are held in trust avoid that probate situation. So
Good.
so yeah, that's a good question there.
I have another one here that question about, instead of converting life insurance for long-term care needs, another option could be a reverse mortgage. How do you feel about those? Obviously, everyone's situation is different. Every reverse mortgage is not the same as another reverse mortgage, so it really depends. I would say that over the last 20 years, it's gotten better regulated and more transparent, where it's not as maybe bad as an option as it was maybe 15 or 20 years ago. So it maybe has gotten a little bit better then, but that's also very much buyer beware, and really something you need to consider with you and your family members. It's still a bit of a last ditch, Hail Mary, if you will. But it has improved in its transparency and regulation over the last 20 years.
Yeah, that's a good point, Ed. And there's another question that popped up about how does Medicaid work if you still own your home? And so some of those can be intertwined. So if your only left financial asset is the equity in your home, sometimes a reverse mortgage can be a good option to provide income from the equity for a different living situation. Now, some states, depending on your Medicaid situation based on the state, will allow you to keep your home but still be Medicaid eligible. There is a pullback. So basically how it works is if you're accruing Medicaid expenses, but you still own your home, there's basically a lien on the home equity. So when it gets sold, then they would recoup back, but you're still able to, keep the home if you think you'd maybe be moving back there eventually. So sometimes the reverse mortgage can be intertwined with the Medicaid situation. Keeping down the Medicaid theme, resources for Medicaid limits. So again, that's going to be state specific. So each state will have their Medicaid websites, and they're typically pretty good about being clear on asset levels. In Wisconsin, for example, the spouse can keep a certain amount of assets. So it's totally state specific. So you just have to kind of look at your specific state's Medicaid site there.
Yeah, there's another one here. When do you know you need a trust? I would say we almost always default to needing a trust. It really helps you or your parents or whoever the individual is to really bypass the cost and the time that probate takes, as well as the exposure to public records. Having things in trust will really just bypass that. People will think, well, I'm below the federal estate tax or the Illinois estate tax limits. I don't need a trust. Saving taxes is just one consideration. I think avoidance of probate and the public records and the time that probate takes is another reason to consider a trust.
We've got one more question here, Ed, regarding veteran benefits. So are there benefits for the widow of veteran? There can be in certain situations. That's where we would recommend connecting with the VA. It's basically like a consultant that each county would have, and there's certain information that if you can gather from their veteran record, then they can look up their specific record and determine what the benefits are. So they have a pretty good system, computer system of tracking veterans and their benefits specifically based on, service time and things like that. So getting connected in with the VA connections at the county level is a great thing. And in my experience, they're usually very willing to talk to family members and helping out. So hopefully that's a good resource there. All right, well, thank you, everyone. That's all the time that we have for questions. And thank you for participating in today's webinar.